Hello, this is Ahura from Otis Markets. Today, Friday, June 28th, we'll be with you with a short review on US personal income spending data and market reaction. First, let's check the data and see what we had today on economic calendar, and then we will check the market reaction. So far, we have a core PC price index on the annual scale increasing by 2.6% as market expecting, but a little bit less than 2.8% that we had in April. Core PC price index on the monthly scale increased only 0.1%, much lower than 0.3% that I think we had in April, but at line with the estimates and expectations. PC price index, the headline, increased 2.6% as the market expected, 0.1% less than April. And on the monthly scale, we had no increase, so that's very good news. Generally, these numbers are very good news for the stock markets in the US, for generally for the financial markets in the United States, and especially for Federal Reserve. And they can, while they can be happy and they can somehow say that, okay, what we had to plan, so we are on the plan, we are on the road, we are on the roadmap that we had to do this to control the inflation. So now they can make they can celebrate the result and say that yes, the inflation is on the way we want and it's decreasing. But the only point that we have some doubt here that what will be happen for the inflation in the future in the next month is this number, the personal income. Personal income increased 0.5% on the monthly scale, which means people will have more money to spend in the next month, which can make the lowering the inflation. This can somehow challenge and make some problems and challenge the lowering the inflation in the next months. At the standard level, we can say that 0.3% high, 0.3% personal income increase on the monthly scale can be standard, can be something that the market can accept, but 0.5% a little bit out of the frame, and this can make some doubts for the next month. But at the same time, if you don't forget, yesterday also we had a very important numbers, especially this PC price index and core PC price index on the quarter scale for the first quarter. As you see, core PC price index increased to 2.7% on the first quarter, while the headline PC price index increased by 3.4%. Both of them higher than estimates, higher than the previous quarter, which means that at the first quarter, the first quarter prices increased much faster than the estimates, which is not such a good news for the market. So that says that, yeah, in April we had a 0.3% increase in the core PC price index. In May it was 0.1%, but in June, if we have a higher rates, then we can say that in the second quarter also the numbers can be challenging for the Federal Reserve. Still, these numbers say that, okay, we are on our way. We can expect the Federal Reserve to cut the rates by 0.25% in September. That these numbers can say that, but with more doubts on what will be the future. Can we have the second or the third? Because the numbers, the personal income is under question. At the same time, the other data that we had yesterday, such as durable goods orders, if we look at the durable goods orders increased by 0.1% on the monthly scale, but if look excluding the defense and excluding the transportation, we can say that orders fell by 0.2% and 0.1%, which means economy is not expanding as it was expected. So the economy has some challenges still, even if the GDP was better than estimates and but increasing 1.4% at the first quarter, much higher than a little bit higher than the 1.3% estimates, but much lower than the 3.4% that we had in the previous quarter. That these numbers generally they can say that okay, inflation is decreasing, economy is lowering. Future steps for the inflation, what will be happening in the future is under questions. As first quarter, if you look at the first quarter, can be a very good example. In April, core PC price increased 0.3%. In May, increased 0.1%. But what will be happening in June is under question, since the personal income increased by 0.5%, which means that there is more cash to spend. So what will be happening for the personal spending and the personal PC price in personal inflation? That will be under question. So we have to wait a month and see. But these numbers still we can say they can confirm the 0.25% rate cut in September. But at the same time, there is another number that we have to watch on that. We have to watch that is where is it? The real spending? Yeah, real consumer spending. Here is the real consumer spending in the first quarter increased only 1.5%, which is much lower than 3.3% in the previous quarter and 2% estimate. So that number is also say that the people spending less. Even if they increased, they gained more, but they're spending less. That confirms the CB consumer confidence number that we had 3 days ago, which again fell to 100 from 102. These numbers generally are not such a good news for the economy. So, but let's go and see the charts and see what was the effect of these data in the chart. So this data says that inflation is lowering, so rate cut is possible. Personal income is increasing. The future steps under question. So US dollar can still it can lower a little bit, but it doesn't mean that it can increase. But it cannot fall so much as well. So why? Because inflation is somehow under control, but higher incomes with the 0.3% increase in April upward revision, that means that the question for the next steps of inflation is under question. So not higher GDP, not higher US dollar index, but not falling as well. A little bit somehow between 104.70 point and 105. Around these numbers, we can circle around these numbers, but not lower, not higher. And 106, sorry, 106, 104.70, 106, but it can fall around 105, these areas, but not lower. On the other hand, if you look at the stock markets, we can see S&P 500 also falling. Why the S&P 500 falling? As I told, inflation is under control, good. The next steps is under question. Also, the economy is weak. The people are spending less. When the people are spending less, it means that the companies, they have less income, which is not a good news for the stock market. When the companies, they have a less income, they have a less sales, people spending less money, even if they gain more. So why? Because expectation for the economy, CB consumer confidence fell to 100 from 102. So all these numbers say that the people, they have more doubt on spending your money. Why? Because they have more doubt on the future of the economy. That's not a good news for the stock market. So we can see the S&P 500 falling. With these numbers, I can say that the uptrend is somehow ending here now until September meeting. So from now on to the September meeting, the downward revision is expected. So we can see probably more correction than higher than increasing until September Federal Reserve meeting. The same thing we can see in NASDAQ chart or also in Dow Jones chart. These are the same reactions that we can see in all of these charts. So this is not something just in S&P 500 or in NASDAQ. This is generally market reaction, the data, and how we can read this data. Hope it was useful for you. If you have any other question, please don't forget to write in the comments. I will try to get back to you as soon as I can. Have a good day. Bye-bye.